I was conducting a webinar yesterday in German, and I want to show you something, what I mentioned. This is not related to any indicator, not to any strategy or similar thing. This is about money management and position sizing. I will be using Atas chart as the board, so it's a little bit funny, but it's okay. I was talking about one thing, about closing the position with a risk to reward ratio 2 to 1, risk to reward ratio 2, with a win rate of approximately 60%. This is very, very careful estimation. You can achieve much more when you engage market structure and the levels from No Detective and Linoscope. What I was saying, I was talking about following things. You can certainly, let's say this is support. You can certainly trade the first reaction to the support. Let's say that the price goes to the level from above. Obviously, it's a support. Then it reacts. I like when it goes a little bit through. This is very usual, very common, and I like it, actually. And then it starts moving in the opposite direction. Now, imagine that you get here a nice candle with the confirmation, which means semaPHorek, for instance here, like so, with 6 lights. So you can enter the trade here. You can open the position here, but actually it's the first reaction. Usually you get the 2 to 1 risk to reward ratio and the profit comes. However, this is the most aggressive way of opening a position, because this is just the sign that the market sees the level, that there might be the reaction. Because if you got, for instance, 7 lights at semaPHorek, it's wonderful and it's worth trying. However, there are other approaches, and the most effective one is you can wait for the pullback, basically, which is better. But you can also wait until this happens, until the previous high gets broken. I mean this one. Let's use again a different color so that it looks nice. When this high gets broken, this is the change of character. Now, basically, this is already change of character, because this high, we got high, we got lower high, yeah? We got lower high again, and then we got low, lower low, lower low. But check this out, we've got first higher low. How do we know that this is the higher low? At this very moment. At this very moment, when the candle breaks the level and closes above it. This is very important, that the candle closes above it, or even better, when we have the entire candle outside the level, outside the lower high level. This is the confirmation that there's something happening. And now we basically don't need the words and terms like change of character, break of structure, and so on and so on. In our language, basically in Czech, I came across when I first started paying attention to the market structure. There's a strange combination of change of character and break of structure. We basically say in Czech, change of structure, you know, so it doesn't make sense at all. These are two terms put together. However, the crucial thing is that actually you pay attention to one thing only one thing, whether supports or resistances hold or get broken. Because obviously there was this situation, there's this low, okay, let's begin at the beginning. There was this low which gets broken. It's low and it got broken. And then there was this high, and this high remained at the chart. So obviously we are in a downtrend. We are in a downtrend. When the resistances hold and supports get broken, that I want to see the pullback, and this is the rule where I want to see at least 2 candles in the opposite direction. I want to see wrong color. I want to see at least 2 green candles in the opposite direction, and then I enter at the candle with semaPHorek in the previous direction, and the previous direction is obviously the downtrend. Because this is the market structure. It's much easier than many people think, and then many people basically explain. I really don't understand why somebody explains it so that nobody understands. It's really easy. As long as supports get broken and resistances hold, we are in a downtrend. So I basically can open here short as well. However, now you start putting all the information together. You have this candle, this semaPHorek 7 at particular level, which makes sense. It might be, I don't know, low volume node or VPOC by VWAP or VPOC by, or POC by VWAP, and so on, whatever, no matter what the level is. But all of a sudden, we have here this reaction, which tells me something. Wait, what happens next? Because there were so many opportunities to short that it's okay to wait here at this moment and not shorting here, because something may change. And it can change, but you won't trade the first signal, or basically what I said yesterday, it's silly closing this trade at risk to reward ratio 2-to-1 only. Why? Because you expect the reversal. You expect a major reversal. So this basically doesn't make sense, because the win rate here at this candle is actually lower than what I'm going to show you in a while, but the risk to reward ratio, the expected or possible risk to reward ratio, is on the other hand higher. So we can or should wait until we see the candle which breaks high, and all of a sudden the situation changed. There is a shift, because all of a sudden supports hold. You see that? Supports hold and resistances get broken. So from this moment on, we shift our bias from shorts to longs and wait for entry. And entry is the same. It's always the same at the pullback. Now I want to see at least 2 red candles, which is in my strategy considered as the reversal, at least 2 candles, and then I see the candle in the new direction, which is currently an uptrend, and I basically enter here. When I see at least 6 semaPHorek lights, because that is the confirmation that there was the fight. There were winners and there were losers, and we want to enter at the moment when there were losers, because losers means that it sounds strange, but when there are losers, then it means that the market is basically healthy. There must be losers. This is inevitable. It's always about winners and losers. And what happens very often, and basically I drew it really coincidentally very correct, is that the previous resistance turns to support. So this is basically flip. This is what Linoscope uses for VPOC, for previous day high, for initial balance levels, and so on and so on. This is flip, technically. We have a breakout here, but we don't trade breakouts. We wait for pullback and semaPHorek. And here is my entry. Here is my entry. And I will place my stop loss just below, this is a horrible wick, just below the candle with semaPHorek signal. So this is my stop loss. And I target 2 to 1. Now, there were yesterday, so this is important. We can either enter here at this candle very aggressively, or we can enter at this candle, which makes more sense, and this is safer. The win rate here will be higher. And if we really target risk to reward ratio 2, then increasement in the win rate is something we want to see. So if we maintain the risk to reward ratio of 2, then obviously an increasement at the win rate ratio, at the win rate value, is something we are looking for. So this is regarding the entries. This is something I mentioned yesterday, and I thought this is worth mentioning in English as well. Now, regarding the risk to reward ratio, position sizing, and moving stop loss to entry, and so on and so on, I explained that I basically invented or discovered, not invented, I discovered the strength of the semaPHorek indicator by backtesting it and by looking at the chart, of course. And the point is, let's say this is the entry candle based on the semaPHorek signal. This is the entry candle. I will increase it in size, but I will show you something. Now, I realized that if there is a confluence, this is basically the confluence of different parameters, which are sometimes related to each other, such as the third and I think the fourth condition. The third condition is relative volume, which is basically implemented power bars, relative volume, which is the ratio compared to the average volume from the previous 10 or 20 candles. So the third light is the relative volume, and I think the fourth light is absolute volume, where we enter, for example, 1,000 contracts. We want to see at least 1,000 contracts at the candle to get the fourth light, but the third light doesn't have any relation to an absolute number. There can be, for example, I will make it a little bit insane. There can be 50 contracts and we still get the third light if the average from the previous 20 candles were at least 1.75 lower than those 50 contracts. I set the third parameter to 175 usually, so those are the numbers I'm talking about right now. So these numbers or these conditions are a little bit related to each other. Not necessarily, but obviously more related to each other than, for example, absorptions or finished business, because finished business has nothing to do with neither with relative nor with absolute volume, obviously. Now, I observed and discovered that when all 9 conditions are in the confluence, that there's very high probability that the price makes at least 2 to 1 movement in the direction of the entry candle. So let's say this is again the entry candle. I made it too long. Okay, I made it too long. I can make it shorter so that I can show you the idea I want to. If we have entry candle like this, yeah, this is good. And there is, for example, okay, I was right 7, no matter. Then stop loss here. This is my break even. This is 1-to-1. This is 2-to-1. The price makes with a very, well, very high probability. 60% is already a very high probability. I will show you in a while. But it can be higher. This is obviously related to the instrument, whether it's a Nasdaq, S&P, crude oil, Dow Jones, Russell 2000, gold, and so on and so on. So I don't have any particular number which is valid for every instrument and every time frame. It matters whether you trade Renko 14 at Nasdaq or Renko 18 or Renko 24. I mentioned I traded Renko 30. And it's still okay, because when you see such a strong reaction at Renko 30 with, let's say, 7 lights, then 2-to-1 is also expectable. It also is very probable that it makes the movement. So this was the idea behind, and I improved the conditions and I improved the parameters for each condition. But there's no guarantee that the price goes straight to 2-to-1 level and you get the target within a minute. You can get the target within a minute. It's not unusual. Or there can be a pullback. No problem. There can be a pullback, and basically, no, not like this, not like this. I was going to draw something different. There can be, for example, another green candle. You are already 1-to-1 in the profit, and all of a sudden, here comes the pullback. The first candle, the second candle. Now, don't talk about the Renko candles, which has always the same body, but I will draw intentionally this candle longer. Now imagine one thing. When this happens, and you would, for example, at this moment of closing this candle, when you shifted the stop loss to break even. You shift the stop loss to break even because you think, oh, we are above 1-to-1, we are close to the target. Now I don't want to get the stop loss. It's nonsense. It is nonsense, because when I was observing the pattern, I did not pay any attention whether it pullbacks or not. I paid attention to one thing and one only, whether it achieves target or not. No matter whether it goes straight, whether it makes pullback, or whether it rotates here for 5 minutes. I don't care. I didn't care. I cared about whether it hits stop loss or whether it hits target. Nothing in between. This was not about moving the stop loss to break even after breaking 1-to-1 ratio, or when it starts hesitating here, oh, I rather close the position. No! Then you change the entire statistics. You mustn't close at 1-to-1. Never. The level is not here. It doesn't exist. There are basically 2 levels when I enter the trade only valid. There is stop loss and there is target. There is nothing in between. If you take care about whether you should close at this rotation here or you should shift your stop loss, then you have wrong size position. Then you are not prepared for such a condition, such a situation that the market pulls back and your stop loss get hit, or when you get here the rotation and you get impatient. It is one thing only, wrong position sizing. Decrease your position size. This is not, you don't have to be profitable by the end of December. Let's get profitable by the end of January, by the end of February. And these 2 months extra saves you actually a lot of time, because the worst thing you can do is to start changing the parameters, change the values, change the behavior based on your fear. This is fear, nothing more. moving stop loss to break even is just fear, nothing more. And think about that, about the what happens actually when you enter here. Then you see semaPHorek 7, which is fine. It's a signal that something happened at this candle, and you should open the trade here. Let's say this is this candle, you know. This is why I like when the price goes slightly below the level and creates lower than the level, actually, because price can actually retest the level and then go back. This is okay, this is normal. But when I was inventing the pattern and the parameters, I really did not pay any attention whether there is pullback or whether they go straight. It doesn't matter. I don't know. If you ask me, in how many cases, what is the probability that the market hesitates? I answer, I don't know. I honestly don't know, because I did not pay any attention to that. And this is crucial. If you are afraid of that, then you have a wrong position size. You don't have to hurry. That's a lot of time. It's better to get profitable 2 months later than fighting the fear for 3 months, or losing the faith in the settings or in the indicator. That is a real disaster. Not being profitable 2 months later. That's okay. There's no problem with that at all. So basically, stop loss or target, nothing in between. I don't close here. Yes, I remember situations when I was, let's say, 1 tick before the target and I got stopped. You know, and my friends told me, "Oh, if you above 80% of your profit, you should close when it reverses." I don't know where it reverses. It can reverse here and then go straight to target, because these are the patterns I saw at the chart during those 200 hours when I was developing the indicator and putting together the conditions for the confluence. You know. I don't care. It's okay. I was here and I got stop loss. But in the backtestings, this rather exceptional situation, but which can happen basically every day. There's no doubt about that. Meant that there was stop loss hit. I did not make. Okay, you can do one simple thing. You can start market replay in ATAS, and then you can just write down profit loss. 1 profit, 2 profit, 3 profit, 1 loss, 2 losses, 4 profits, 3 losses, and so on and so on. You just draw the line. But you don't care. You see the system, it's binary basically. There's yes and there's no. There's nothing in between. There's no room for was there any rotation above the entry level, or this loss, this particular loss, how did it look like? Did it go straight to the stop loss, or was it 1 tick before the target and then it reversed? I don't know, and I don't care. There's important that there are 1, 2, 3, 4 profits and 1, 2, 3 losses. And now, basically, this is a good situation when I can start talking about the last thing I'm going to talk about, and it's the risk to reward ratio when closing the trade, because there are, again, 2 enemies for us, 2 traders' enemies. And again, unsurprisingly, it's again fear and greed. Fear is that the price won't hit your target. That's the fear. And greed, if it goes straight, immediately, basically, 1, 2, 3, and you are at the target, and you start thinking, oh, maybe the trend is fast, isn't it? Let's make it 3-1. I don't know. I cannot guarantee that it goes there, because I didn't backtested it. I backtested it for the condition of I want profit or loss, and I aim at 2-1 exactly. Not more, but not less, you know? And this is the beauty of the money management. It's basically very, very, very nice. It's wonderful, because when I aim at risk to reward ratio 2, then it means that I get rewarded with, I said yesterday, with 2 coins. When my profit gets hit, it's not a question mark, it's 2, it's a number. and I will lose 1 coin when my stop loss get hit, which is wonderful because in this situation I have 2 coins, 2 coins, 2 coins. 2 coins equals 8 coins with 4 profits, and I lose 1, 2, 3, just 3 coins with these 3 stop losses. 7. Altogether it's 7. It's 4/7 is the win rate. Yeah, it's the win rate. 4/7. 1/7 is, I don't know, 1, 4. No matter. I don't have any calculator. It doesn't matter. And this is obviously 3/7 is the rate for the losses. But even with this win rate, which is slightly, I will open the calculator. I'm curious, basically. What did I bring you? 4 divided by 7. It's 57. The win rate is 57%, and this is not realistic. This is very careful estimation of the win rate of semaPHorek method. Even here, it's out of the question. It's out of the question. But even with win rate 57% and risk to reward ratio 2, you are in the profit of 5 coins after 7 trades, which is great. This is basically the holy grail because you are profitable. This is what we are aiming at. And basically this is very careful estimation. I'm not guaranteeing anything. Obviously, this is trading, but 60% win rate is very, very realistic. No matter what the instrument and time frame is. Obviously, trading Renko 2 at Nasdaq is it's insanity. Obviously, so that's why I'm careful with the numbers. But having win rate of 60% means that you win 3 times and you lose twice when you make 5 trades, which means you get 6 coins and you lose 2 coins. So after 5 trades, you are plus 4 coins. Plus 4 coins after each 5 trades. You can make 5 trades in a day. You can make 5 trades in a week, making 1 trade a day. There are days when it's super simple to get 3 targets without any loss. But there are days when you get 2 stop losses and you have to consider whether the day is not different. I don't know, because of macroeconomical news, because of, I don't know, some politicians speak or something happened, market is nervous, or it hesitates, VWAP is basically flat, and very narrow value area, which signals that there's no trend. You can basically trade the breakouts of the value area high at VWAP and aiming the VWAP, but I don't trade in these days. I don't trade it. It's a bad day. There are said to be 7 types of the day based on Steidlmayer, from the non-trending, no trend to either trend or double distribution, and there are 7 days in between. There is a normal day, normal variation of the normal day, and so on and so on. We can talk about it later. It's very interesting. But nothing beats market structure. Nothing beats market structure. When you start paying attention whether the resistances hold or get broken. And where we are in the relation to the previous day, of course. So there are other ways how to make this working, and I think better than what Peter Steidlmayer came with, because this was valid by the end of the 70s, I think, or beginning of the 80s when he invented market profile, but the markets changed, of course, because of the computers and the other things. And the crucial thing is that we basically respect what trend actually at the instrument is. You honestly, you don't need to know how the weekly candle looked like last week, or how this week's candle looks like, because there might be a 2-hour downtrend during the first 2 hours after the America Open, and then it basically doesn't matter whether the weekly candle was red or green, because we trade this situation. We trade Renko candles. And if we get to the computer during the downtrend, then the weekly candle from the last week could have been long. It doesn't matter. Of course it doesn't matter, because if the candle was long, if the weekly candle was long, then maybe pullback is happening. Imagine a situation like this, These are the weekly candles, and we closed here. Do you think that the market goes up or down? I don't know, because I will do one thing. This was the weekly candle, and we closed here. And there is a very, very high probability that the market pulls back because of one thing, because of this fair value gap. This is fair value gap. And the market tends to close the fair value gaps before the continuation. So we don't pay any attention to how the weekly candle looked like. Not the weekly levels. This is something different. Because, for example, there could have been the VPOC of the weekly candle, and the reversal happens here. So weekly levels and the shape or the length or the color of the weekly candle are different things, obviously. So altogether, I think I'm finishing. Altogether, this is something I was going to tell you in English as well, because it's a pity I mentioned this in German, not in English. semaPHorek was built for maintaining the idea of either stop loss or target, nothing in between. Not shifting the stop loss, never shift stop loss to break even, and not closing even partially at 1-to-1. No, you want either stop loss or target. And as said, when you get nervous here during this rotation, then your position size is too high. And this is basically, I'm going to finish this video. Maybe very boring, but very important. I remember when I first started hearing about these things, I get bored, very bored, because I was going to trade. I was going to opening and closing positions, not talking about pluses and minuses, and 3 times 2 is 6, and 2 times 1 is 2, and 6 minus 2 is 4. This is so boring. But basically, this is more important than semaPHorek, because you can be very, very you can collect losses with semaPHorek when you don't respect the rules. And rules are either stop loss or target. Nothing in between. This is basically for me a forbidden area. Doing anything here between target and between stop loss. It's a forbidden area. I have forbidden. I'm not allowed to do anything here. I set it to autopilot and let's fly. Let's fly. And now the position sizing. There is one very crucial thing. I think I will delete something so that I have some free space here. Okay, this is good. I will leave it here because I may need it. This 60%, I may need it. Now, prop firms. You have basically one parameter with prop firms which is important, one and only, and it's the drawdown. Nothing else. Your drawdown of $2,500 is much more important than the account size. It's nonsense. It doesn't matter at all whether you have 25K or 50K or 75K or what the hell, 300K. It doesn't matter at all. This is absolutely obsolete information, an obsolete piece of the information. This is what matters, nothing else. Why? Because you should trade the size you can. And by can is not that I can open the position with 10 full contracts. This is bullshit. Literally bullshit, opening so many full contracts. You should open so many contracts, maybe even micro contracts, that you, first of all, feel comfortable. This is the thing with the utter importance. You must feel comfortable with the position size. If you open 500, if you risk 500, and all of a sudden it starts rotating here, and you got scared of losing 500 here, then you've got the wrong position size, obviously. So this is one thing, and the most important thing, feel comfortable with the position size. And the second thing is, how many stop losses can you get? Of course, not how large your account size is, but how many stop losses can you get? Usually with a account with a drawdown of 2,500, you can basically open 1/10 of the drawdown. So basically your risk can be up to this is important, up to $250. Why? Because if you open the position with a risk of $250, then you basically can hit 9 stop losses in a row, and you still are above the water, so to say. But you must know that you open the trade absolutely cool-minded and unbiased, even if you knew that you would burn the account when the 10th stop loss happens. You know, it's again about being comfortable with everything. So it's okay if you start opening with stop loss of with R of 100. What happens? You can lose $100 at the prop account only. You need to get used to it. Attention, it's not funny. Even $100 at the prop firm is not simple. I remember my first account at the prop firm. I was scared of opening the trades, no matter what the risk to reward, no matter what the R was. I remember that. And my first account stayed for almost 3 months because I was scared of opening the position. It takes time. It can take years, but it's something that brings you money. Nice money from anywhere. You can close your computer in Europe, open it in New Zealand, and you continue where you basically interrupted your work. You are not somehow related to your colleagues. You don't have any colleagues. You don't have any stress with the invoices, with the freight, with the durability of the goods, and so on and so on. No matter how bad you buy NASDAQ, you always sell it. Always sell it. These are the advantages. The disadvantage is it's psychologically quite difficult at the beginning. But when you get used to the R of 100 and you stick to it, this is very, 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 very important. If you get 5 losses in a row, you basically don't have to hit 5 stop losses in a row. But this can happen if you hit 5 stop losses in a row. So this is very, very improbable and this is another point. This is another thing I was going to mention, that when your R is $100 and your drawdown is 2,500, then you may hit 25. Basically, you should hit 25 stop losses in a row to burn the account. 25 stop losses in a row. Imagine the improbability of that. If you hit, for example, 3 or 5 stop losses in a row during one day, then you basically should stop trading, because the day is different for the reasons I mentioned before. But this is very effective. This is very safe. Trading $100 risk, and aim at risk to reward ratio 2, which means with this mathematic here, you earn 800 after 7 trades, and you lose 300. You make $500 after 7 trades, which is wonderful, in my opinion. So this is how I was going to show you and explain you, and I hope there's something useful for you.